Hello and welcome to BloombergQuint. We hope you're having a great weekend, and wherever you are, you're not stuck in a traffic jam or wading through flooded streets, which seems to be the story of most of India right now. The other story that's been gripping the headlines is the GST story. Last weekend, Badri took us through an intensive 2-hour session to understand what GST is all about, how it will replace the variety of indirect taxes that India imposes right now on both goods and services, and what it will mean for businesses, big and small, for consumers, for traders, for employees, and for all of India's stakeholders. We continue our GST conversations, and before I tell you what today's discussion is about, let me quickly introduce both my guests. We have Badri back with us. That's Badri Narayanan. He's partner at Lakshmi Kumar and Sridharan, one of India's well-known tax law firms. Badri, you want to wave out to people? There you are. And that's Vineet Agarwal, right next to me. Vineet is the Group Head of Taxation at JSW Steel, one of the country's largest metals companies. So what are we talking about today? We're going to talk about the GST timeline today. Now, the first time that India committed to the implementation of GST, if I'm correct, gentlemen, was in 2006, when P. Chidambaram, the then finance minister, in his budget speech that year, said that there was broad consensus in the country for the implementation of GST, and that he set a target date of 2010. That's April 1st, 2010 for GST, okay? So 2006 is 10 years ago. That's when we first resolved to bring GST into the country. 2010 was the first target date. Since then, target dates have come and gone. Every year for the last 2 years, we've been speculating on, will it be this year, will it be next year? But it does seem finally that we are coming closer to the implementation of GST. And that's what we're going to talk about today, right? What is the timeline? What are the various legislative processes that are involved in getting to GST? What are the infrastructure requirements in getting to GST? How are businesses preparing, if they are at all, how are businesses preparing for GST, both big businesses and small businesses? And we will be taking your questions too, if you are from big or small businesses, on what you should be doing to prepare for GST. Now, having done that introduction, I'm going to jump right in. The first thing we're going to talk about today are the changes or the amendments to the constitutional amendment bill pertaining to GST that were approved by the cabinet this week that just got over. Two critical changes there, Badri. One is that the 1% interstate levy, the additional levy to GST, right, will be dropped. That's what the cabinet has approved, and that can be nothing but good news. I'm going to ask for you to explain to our viewers what was the genesis of that 1%, how it came into being, and why it's doing away is good news for business.
Excellent. Very good question, Menaka. And as you're all aware, this 1% additional tax basically has its genesis in what we call as the central sales tax on interstate sales, or the CST. This is a 2% tax that we currently collect on all interstate sales, and these, as you know, are an origin-based sales tax levy, which means that these 2% which is levied on all sales made by one state to another state, that is a buyer in another state and a seller in the first state, whenever he makes a sale, they impose a 2% tax on that. Importantly, this tax is collected and retained by the state from where the sale is made, which means that the selling state or the dispatching state is the one which is collecting this, and not the destination state. This is a big boost for states such as Maharashtra, Tamil Nadu and Gujarat, which are net exporters of goods. That is, they consume less than what they produced, and therefore they exported more to the rest of India. In the old regime of CST, these taxes were retained by these states, and therefore it used to go directly into their exchequer. Once you move into a situation of a GST, which I said last week, is a consumption-based destination tax, which means whatever taxes are paid goes ultimately to the coffers of the destination state, which will be the state where the goods are actually consumed. These manufacturing states lose out tremendously on the revenues that they're going to generate and retain. And that's the reason why this 1% additional tax was strongly put forward by states like Maharashtra, Tamil Nadu, Gujarat, of course, is quiet, but I'm pretty sure it's also being an exporting
Well,
state.
Gujarat has been a state that's opposed GST for the longest time, right? In fact,
yes.
the irony of the Modi government pushing through with GST is the fact that when he was Chief Minister of Gujarat, Gujarat was amongst the strongest opposing voices to GST, wasn't
Absolutely.
it? Yeah.
It's the contrast only is with how quiet they are right now.
Well, that was going to be the case, right? That's how politics works.
Absolutely. But
yeah.
the important thing is, Maharashtra, even till a week or two ago, was still clamoring for the 1% additional tax.
Oh, it was.
I think that's one of the significant impact that they're going to have on that collections. So Maharashtra, even to the last minute, was still asking for that 1% tax. Of course, now the empowered committee came together and said, no, we don't want the 1% tax. But there is a twist which is there on this 1%. So it's going to be net beneficiary, because then you don't have to account for two different systems of taxes when you're a business.
Correct.
But at the same time, the exporting states are going to lose out tremendously on the revenue they generate through these taxes.
Okay, before I bring Vineet into the conversation, the fact that exporting states will lose out, is that not made up by the second decision that was made this week, or the second approval that the cabinet gave, which is that they said that they are guaranteeing that for the first 5 years, they will make up for any revenue shortfall that any state faces, which essentially means that they will share a larger portion of their GST pie with the states, depending on the revenue shortfall that states make. So the bill earlier suggested that up to 5 years we will compensate you, and now it will say, once the change comes into place, that we will definitely compensate you for 5 years, right? So will then states like Maharashtra, Gujarat, Tamil Nadu still have reason to worry?
So the answer is that at least they may not have any reasons to worry for the first 5 years, because if you see the earlier language that they used, the language was the center may propose a law which may compensate them. They really basically come out and said, no, may is not acceptable. They are going to go with shall, which means the parliament shall propose a law and shall compensate for 5 years. But the twist in that is that what are they going to compensate? When you say revenues, so revenues comes not only in the form of sales tax, but also in the form of local body taxes.
Correct.
Other taxes. Are they all going to cover all of those? For example, Maharashtra, I think, generates about 10,000 to 12,000 crores of local body tax revenues every year. Okay. Is that going to be part of the compensation which is paid? Because the original compensation, if you see, of CST, it's usually sales tax which is compensated. Other taxes have not been considered. So some vagueness with respect to what the compensation means. But yes, there is some amount of assurance given to all of the states that whatever may be the situation, we are going to largely compensate you for whatever are going to be the taxes, and probably coupled with what the rate is going to be ultimately, we may have a situation where their interests are adequately protected, at least for the medium term, say 5 years.
Okay, great. Okay, Vineet, who cares what the center and state decide, right? From a business point of view, you want certainty, you want a rate that's not economically unviable, and you want some degree of simplicity in the way this tax is going to be implemented. What do you make of the changes that have been proposed this last week, the entire GST conversation that's been going on so far?
Thank God that 1% has gone, actually. So, but in fact, it was defeating the entire purpose of GST. I can take example of my own company, that we have a manufacturing facility in Karnataka. We produce some HR coils there, bring it for downstream finishing in Maharashtra, and then sell it to one of our yard in one of the northern states, and then from there our final destination. So 4 points, 4% additional tax, entire GST
And
gone
no
bust.
credit.
No credit. It's no credit at all. So ultimately, which national market you wanted to create with that 1%? Thank God, sanity prevailed. That has gone. So now we have at least in principle one uniform national market where goods can move with credits, with adequate credit flow. Yeah, we want certainty. Revenue neutral rate is of course a concept which is for the empowered committee to decide. But yes, it should not be inflationary. And finally, with the all credits, I hope some simplicity and some actual GST should prevail overall. Finally, it should reach that manner.
Okay, great. So I think that takes care of the two big changes that took place this last week. But the one change that has not taken place, and the one that the Congress is still holding out on in some way, okay, two in fact, is it? Yeah, one is that they wanted the rate, the final revenue neutral rate of GST to be included in the constitutional amendment bill. The BJP has been opposed to that. Now it seems that the states agree with the BJP and they too are opposed to putting a rate in the constitutional amendment bill. And a few days ago, we had Rajiv Shukla, senior leader of the Congress party, tell my colleague in Delhi, Thwesh, that, well, if it's not in the constitutional amendment bill, then we're trying to talk with the government to see if it can be included in any of the GST laws, or if we can find a way to ensure that the GST Council has the last say on the rate. Now, explain to us why the Congress was so fixated on putting the rate in that main bill, which is the constitutional amendment bill, whether that was a good idea or a bad idea, and whether you think some other compromise can be sought.
Sure. Again, very good questions, Menaka. And so if you go back to why they wanted this rate, if you ask as any rational person, it's quite difficult to determine why you would want to put a rate in the constitution, except to say that this is one way of protecting the ultimate consumer. Because as you know, the minute the rate goes beyond a certain level, you're going to have a situation of overtaxation, which means you'll have a damaging effect on inflationary effect, and will have more impact on the common man. So this is more of a welfare measure the Congress wanted to bring in. But I'm not sure how that would have been played out, because the minute you have a rate in the constitution, and you know how difficult it has been to kind of pass an amendment bill in the constitution, it becomes very difficult in times of war or strife or any natural calamity to be able to raise these taxes once you have a bar in the constitution. And I think the states, even the Congress ruled states, are not keen on having that, because it does away with a lot of flexibility. We still don't know how the individual revenue sharing is going to get divided between the states and center once the GST comes in, and to be able to put a rate in the constitution itself which is going to tie you down without really knowing what the economics of this GST change is going to be. It's very, very difficult.
I like you say tie you down, but before you go on to what the middle path could be, for consensus to evolve on this, I want to ask Vineet if he would like a fixed rate, a rate that's committed to, by everybody, and that one that's not open to frequent changes. So you may not be for or against the Congress or the BJP, Vineet, but do you as a business person feel that yes, the rate, whatever the revenue neutral rate is, should be fixed in legislation, or should be really very difficult to change as opposed to being able to change very easily through a notification, as many indirect taxes are changed?
Well, constitutional cap is a laughable idea. In fact, the way the constitution has to be amended, the kind of process is required, you cannot have a fixed rate, because we don't know whatever revenue neutral rate we are talking about these days, whether it will be sufficient to compensate the states also. Tomorrow you may, because center does not have a surplus fund, ultimately money will have to come from these collections only. Yeah. So you cannot compensate. So you cannot compensate from air. Ultimately, if the compensation is not coming adequately, rates have to be tinkered with. As a business, yes, certainly we want certainty and fixation. We don't want every day new cess coming every 2 months, because it requires not only systematic changes, our costing changes. We don't know. There are so many cesses being imposed now which don't allow even credit. So entire calculation goes bust. Okay. So we don't want that.
But you didn't want it in
but certainly constitutional rigidity is not required, because tomorrow you may require to reduce this rate also. Then how will it happen? So it may go both ways. So to certainly in fact no rate has been prescribed in the constitution. Why should it be also? Okay. And let it be left to the GST Council, which has representation from all the states as well as center. And the kind of voting pattern they are deciding in the GST Council, neither center nor the states alone can tinker with it. You need a consensus.
Yeah. I'm going to add at this point that, by the way, Vineet was at one point in time on the other side of the fence, right? He was a tax officer. So when he speaks with both perspectives in mind. It's not just a singular point of view of business saying, oh, but we want this, and this, right? He speaks from the realistic implementation of laws point of view as well. That said, do you believe that there is some way that this rate can be only, so if it's not in the constitutional amendment bill, can the rate be changed at will by the government, and what can be inserted or what can be safeguarded against that?
So just to kind of finish that, there have been instances in the past where certain governments have kind of broken away and increase the rate.
VAT, we are talking about VAT,
So
right?
in
We have seen that
when-
happen in
when we
VAT.
had that. So in VAT, we said all the state governments came together and said we will not have any VAT wars,
Right.
sales tax wars, and therefore we will have a uniform rate. Then lo and behold, one state decides, or one of few states decide that I need more money for development. It's also the state from where our prime minister comes. Okay, so there was a
That was the state that broke away from
Kerala was
VAT.
the first one.
yeah. it broke-
So Kerala, Gujarat, both, yeah, they broke
so
away.
those broke away and said we want to have a higher tax because we want to be able to fund our development. And therefore, what happened is that there are situations where the states are likely to say, okay, I have the power to actually change this, and therefore I'm going to increase the rate. The one safeguard which has been put in the constitution to that extent is this GST Council.
Correct.
So if you see what the GST Council can really do, they can figure out whether something has to be included in the GST bill. So for example, they can decide whether to include or exclude goods. They can decide which goods to be exempted.
Correct.
They decide what is the threshold. They also decide what should be the
Rates.
place of supply.
Correct.
Where is it the place of supply? Which state is actually going to ultimately
So
consume?
all the mechanics of how GST will apply and to what goods and services it will apply
And floor
are
rates.
and the floor rates are
That's the most
actually in the
important
hands
thing.
of the GST Council.
So once the floor rates are in place by the GST Council, then technically speaking, if any other states kind of moves away from that, there should be a way of being able to bring them back in on the basis that GST Council to some extent binds what the states have all agreed for.
No, but wherever this GST, suppose the GST Council agrees on an X rate for GST, where is that X rate going to be put down? What will it be put down in a law? Will it just be a determined rate? And if that, suppose tomorrow the central government wanted to, whichever the government is, like GST is here for the long haul now, some central government wanted to change the rate. How easy or difficult would it be for them to change the rate, without the rate being fixed in the Constitutional Amendment Bill? So if it wasn't fixed in the Constitutional Amendment Bill and it was just a rate decided by the GST Council, would it be easy or difficult for the centre to change that rate?
The answer is that how easy has the centre been in changing the rates every year in every budget?
All the time,
so
right?
Once you don't put this rate in the constitution, then it has to be put in the CGST law, the SGST law, the IGST law.
Which means the centre can literally change it every single year.
Absolutely, except except if it says that we are giving up that right to change the rates by saying that we will go by what the GST Council recommends, then it can be a bar on itself to do so. But I don't know how.
But why?
because
They would have to put that wording in where? In the
in
Constitutional?
the constitution to say the GST Council is binding rather than recommendatory, which is there right now.
And those words are not yet
They are
in.
not there yet.
Okay.
So GST Council can recommend, everybody can bow to it, but they can effectively do whatever because under 246A of the Constitution, they have full power to legislate the taxes the way they want it.
Okay, so this is important, Vineet, because you said it's laughable almost to want to include the rate in the Constitutional Amendment Bill, and that may very well be the case. But there still is a case to be made that that rate ought not to be as easily changed as indirect taxes are today. Because if we were to do that, however responsible or irresponsible a government and of whichever party, it makes it very easy and tempting for the central government to tinker with the GST rate at will almost every year, if not every other month. Would you agree? And therefore, what would you recommend would be the best way for us to have certainty that the rate is not going to be changed without very, very broad consensus?
Well, we are forgetting one thing. There's something called politics. And I think political compulsions will not allow any state, now any government to go rogue in this matter. Because ultimately there's one tax, one incidence. You are charging CGST, you are charging IGST, or you are charging SGST. One incidence. Earlier it was not the case. The charging central taxes were being charged at a different point of time for different value. State taxes were being charged at different rate. So both were mutually exclusive, not interdependent. Now there's a case, just imagine there's a case where there's a Congress government in a state and there's a BJP government or NDA government in the center, or vice versa. Can any government take risk for increasing tax unilaterally, making it inflationary? They cannot afford. So there is a political check and balance, because now the incidence is same. Coming to that, where should be the safeguard? I think it should be GST Council, because GST Council is all inclusive. They have representation from all the states as well as center. GST Council should recommend what should be the rate, and we should not see this annual affair of like tinkering with the rates. We may require initial
Why
years.
would the GST Council put it down? So therefore there still needs to be some language change in the Constitutional Amendment Bill which binds the government of the time to not changing the rates unless they have approval from the
Correct.
GST Council, which Badri says is not the language in the bill right
No,
now.
I think it will not be there, but ultimately you
Then
can,
how do we do it?
you,
What is
ha,
the better
yeah,
way to do
I think this can come by notifications or GST Council rules. It can come that recommendation. The GST can recommend, and I don't think any government will take risk to go against the recommendations because it will have their own representation. But rather than raising these issues in the budgets.
I want to hear what Badri has to say.
Rather than raising these issues in budget. But see, I'm not in favor of putting a cap in constitution at all. Constitution
So
should
that I
be
get.
a machinery.
So, okay,
So
fine, we get that.
rates come into
So maybe
different laws.
that is too difficult. So we are currently set
Yeah.
with two extremes.
Yeah.
One is that if you put it in the constitutional amendment bill, it's way too difficult to change,
Hmm.
and therefore that might become, sort of totally against us in that sense. But if you don't do anything about it, it's way too easy to change. So what's the middle path? I'm trying to ask Badri. Is it just a change in language in the constitutional amendment bill that binds the government of the time to a GST Council recommendation on the rate?
That's the only way, according to me, the middle path.
And that needs to happen.
That needs to happen now. That needs to be, that amendment has not been proposed by the cabinet, and therefore that needs to be done if you really want to ensure that there is no
What if it's
change.
put in the GST laws, the model GST law or something like that? What if a rate's put there? But that's still also very easily changed by
That's
the
exactly like what it is today, right? So today also our rates are in the service tax law, the sales tax laws, the
and it
central
can be
excise
changed
laws.
by
So
with a simple notification.
I mean, it requires only a babu. Sorry to say,
no,
but to be able to recommend what should they change.
But I differ. I mean, why we want to be so rigid about the rates? Let the government of the day decide. Ultimately, it is one of the.
Business is saying.
I agree. No. See, it is business as well as
every time in a budget.
business as well. Yeah, business as well as consumer. Oh, I'll be. But see, circumstances may require government to be flexible. You cannot bind. In fact, let's say if there is some natural calamity, some extra cess is required to be imposed. Will you wait for a GST Council to meet everybody to come on the same board and then decide? And if there's a calamity in Uttarakhand, why Kerala should agree on that?
No, but
Maybe I agree. I mean, yes, there should be certainty. There should be some rate in the law. But why should we be so rigid? Ultimately, we are going for a common market. We never had this kind of proposition earlier. Why we want now? See, this country has seen about now after 1947 till 2016. We have seen different rates, and nothing was bound. There was no floor rate or cap anywhere. Why we want it now?
but,
I don't see.
we've also seen 97.
No, we want certainty. We want certainty. In fact, it is not that
rigidity.
No.
not rigidity.
I'm not so sure about it, Vineet, because I think you've been very polite. This country has seen too many regimes misuse their powers. We've had situations where we've had 97% income tax. We've had scenario. You may say, what is the difference between 18% and 20%? Make a world of a difference. Okay, and it can be the difference between being able to go have a growth-oriented this thing or completely go into a vacuum. So according to me, there needs to be safeguard with respect to what the government can do with respect to the rates. If it doesn't happen, according to business will be shattered. Okay, and it may not be any particular business. There are situations where they may say, for example, decide that e-commerce needs to pay more or some other businesses needs to pay more. So there's going to be a lot of volatility if you don't have that certainty with respect to this thing. And also for the general, for example, if FIIs and others have to invest, or even anybody as an investor has to invest, they want some certainty. This is not, you invest, then suddenly the rates increase or creep up, and then you are going to be in trouble. So these are issues. I would like to have some certainty with respect to the rates in the constitution. I'm not asking for a direct rate because I understand that there can be unique situations where it is. But I believe that the amendment should be made to the constitution amendment to bring at least a middle path which allows greater powers to the GST Council.
Okay. So let's agree to disagree. You say you want it in the constitutional amendment bill. Vineet saying he's happy if it's just a recommendatory situation and he doesn't want too much rigidity. We'll agree to disagree on this because after a point in time, what we discuss in this room will not matter. It is the discussions that are going on in Delhi.
Correct.
And I think based on the sort of concessions that have been made last week by the BJP towards the 1% tax or the compensation to the states, it now seems that the ball is in the Congress's court to soften its stance and allow for some compromise on this situation of rates being in the constitutional amendment bill so that things can move on. So let me ask you the many trillion-dollar question, Badri, and that is just a very quick thought on whether you think that things are at a spot right now in Delhi that this constitutional amendment bill will get passed by Rajya Sabha this monsoon session.
The answer to that is yes. There seems to be enough movement where there is a softening of stand. And if, for example, like you said, if Rajesh Shukla comes and says that it's enough for us to be able to put this rate.
No, he didn't say it's enough. He said conversations are on to try and see if this can be done. Yeah,
it's a very neat way of putting it.
Yeah.
But I also believe that Congress, when it is sitting as a state finance minister in the 13 odd states or 8 states that it is currently ruling, they'll want to also be able to listen to them because they have to administer these states. And
Correct.
they probably want certain taxes. So ultimately, overall, if you see the interested parties who are discussing this, all probably want to have higher revenue. At the same time, not affect the common man too much to be able to throw them out. So I do believe that there are going to be a softening of stance somewhere. There will be some compromise which will be reached, wherein they will say we'll put it not here in the constitution but somewhere else. And then we see next week what's going to happen. Maybe between Tuesday and Friday next week we might actually see some really interesting moves.
Okay, so I think we have some questions already coming in. I think Charan has asked us a question on the feasibility of a dual GST regime. Charan, we did discuss this briefly last week and we'll come back to it in the later part of this discussion. Right now we're going to stick with the politics, and I thought it might be useful for all of us to get a veteran voice in from Delhi on what's going to go on. So as the cameras turn around to the screen behind me, I'm going to tell you that I asked this question to my colleague and editorial director at Quintillion Media, Sanjay Pugalia. Sanjay is a veteran political reporter, and what I essentially asked Sanjay was whether he thought that the GST bill was going to get traction in the Rajya Sabha, will get passed by the Rajya Sabha, what the numbers look like and what the political mood is. Here's the video message from Sanjay.
Constitution Amendment Bill will be passed. Now there is a realization in BJP and Congress party that they will become quite a laughing stock if they don't really seem to be doing something about it. But the real issue is whether GST bill will be passed soon or not. So 2017 April rollout for GST bill is totally ruled out. At the most in winter session, they will try to bring GST legislation. So this is a very small step which became a big deal. If it is creating any impression that there is a significant movement towards GST bill and its implementation, that is not going to happen soon. Amendment bill on that issue, Congress party has been able to convince BJP that some of the demands will be accepted by them. But the real issue of capping the rate via constitutional provision is not acceptable to the government. That will still take some time, and there will be some alternate mechanism that will be suggested when actually debate starts. So to my mind, it is just a baby step. We should not really be very, very hopeful of an early rollout of GST regime.
All right, so there you had it. Sorry, Sanjay telling us very clearly that there is hope that the amendment bill, that the constitutional amendment bill, will get through in this session. But he was making the distinction with the GST laws. That is the main law that talks about the design of GST and everything from how the refunds process will work, the payments process will work, etc., etc. And he said there's no chance that that's likely to go through this session. Of course, it's not even been listed for business, but maybe even in the winter session. And therefore, the sort of the perception that April 1st might be the deadline for GST or the implementation target date is now clouded by that. That might actually be good news, and we'll get to that in just a bit. But I think we've now concluded that this session there's a good chance that the constitutional amendment bill will get through Rajya Sabha. You agree as well, right, Vineet?
Yeah, it's an enabling clause and nothing more than that. What Sanjay said is right. Very big thing has been made out of it. It's only enabling clause.
Okay, fine. We'll get to that in just a bit, right? Now, assuming best case scenario, Constitution Amendment Bill goes through. They find some compromise, either from your point of view or Vineet's point of view, on what to do with the rate and how to bind the rate or bind the country and governments to the rate. And it goes through. That's just one big step, but just one step towards GST, right, Badri? Shall we now talk about what are the other steps and what is the timeline that we can sort of consider realistic as we move towards GST? This is going to become critical. So as Badri gets up and points out to the screen, I just want to tell you this will be critical for business, because if you haven't started preparing now, then you ought to watch this timeline very carefully to know that you're probably already late to this party or behind the curve, and you need to start preparations very quickly. Badri?
Yep. So I'm just going to briefly take you through the timeline that is going to be there from now, assuming that we are going to be able to pass this Constitution Amendment Bill in this session.
Yeah.
Okay. So what needs to be done first? As you know, that we need to have the Rajya Sabha pass this amendment bill by 2/3 majority.
Yeah.
Okay, which means we need to have about 162 out of 243.
I think we have a slide
legislature.
for that. Okay,
Yes.
maybe we can bring that one up. The one that says, yeah, there you
So
have.
that's where we are. This is what the maths is on Rajya Sabha. So we have basically have BJP and its alliances having about 82 seats. Congress has got about 66 with its alliance. So the equation is there are about 7 seats are vacant. So
Right.
they are not right now. So to be able to get 2/3 majority, you need 162 seats out of 243. Okay. So obviously 82 with itself it cannot do, and Congress by itself cannot block
it.
it. But to be able to block, all Congress needs to do is to be able to reach this 81 mark.
I think we went
Okay?
off by one
Sorry.
slide. So we come back to that
Come
slide.
back to that slide again.
There we are.
So here
Perfect.
we got about 81 slides, 81 seats is what we require for the Congress to be able to block it. Okay. So if you see this, the number becomes very interesting because if you add ADMK, which is currently blocking it still,
Yeah.
and if you add 13 to this 66,
Huh.
that makes it 79. Correct.
Right.
And then there's an
They
understanding.
just need the 3 more.
So that RJ, let's say left has got about 9 seats, but there is a split in the left itself because the Kerala division of left says that we would like to go with GST in principle, but West Bengal is a little unsure.
Yeah.
So assume for example we
No,
don't
but
take.
even that, okay, well, okay.
Assume for
Unsure is a good
example
way to put it,
unsure.
yeah,
Okay,
because-
so left assume for example it's the left has got about 9 seats. So if you add Congress, left, and ADMK, we're not going through yet. Okay, because that takes you beyond 81.
Okay.
Assume from Congress and ADMK it comes to about 79. But the interesting thing is RJD, which is
The Lalu
Lalu
Prasad
Prasad Yadav,
Yadav
it's
party.
got 3 seats,
Okay.
and they are at this point of time saying that we will go with Congress, whatever it says, because ultimately we've come together in power in Bihar with Congress.
But
That's-
Padri, let's for a moment assume, okay, for the goodness of all mankind in
us.
this country, that the political parties will stop playing politics with this, right? And they will arrive at a consensus, since they've already agreed on some points this last week.
Sure.
They will arrive at a consensus on the rate as well, and that, there will be robust debate, hopefully, in Parliament,
Parliament.
and that the bill will pass.
Yes.
Then what? Now
Then
we go
what
back to
happens?
the timeline,
So
right?
we go back now to the timeline.
Correct.
So 162 is what, let's say, we've achieved.
Yeah.
And I think the government also is interested in passing it as a consensus rather than as a split parliament.
Yeah, we need
So
to
if
go
you
back to the timeline. Sorry, we're
go
just
back to
bringing
the
you back to the
timeline.
timeline. There,
Yeah,
that's
so
it.
there we are. So this session of the parliament is on till August 12th. So assume, for example, we get through this bill over the next few days. Say
Correct.
August 2nd, 3rd. Let's say, for example, we pass this. So that gets passed in the Rajya Sabha. But I'm
Correct.
assuming after the debate they'll immediately put the House to vote.
Right.
Once that is done, they have to pass
Go
this.
back to the
they
Lok
go
Sabha.
back to the Lok Sabha again with 2/3 majority, which is not a problem.
That one is an
That's
easy
an
one.
easy one.
I mean, that might take what, 5 minutes, 3
Yeah,
minutes,
5 minutes,
2
3
minutes?
minutes.
Same day.
Maybe 1
Yeah.
minute.
Same day.
Yeah, same day.
Yeah.
Because all you're actually going back to the Lok Sabha for is to get the amendments agreed upon
Yes.
last week, and if there's any other change come in the coming week,
Perfect.
just those changes have to be
Just
incorporated
the
in the
amendments
bill
as
that the Lok
suggested
Sabha
by the
passed.
cabinet.
Correct.
Yeah,
okay,
which has
fine.
been made.
Cool.
So that's. But the thing is, if this drags, however, till the last day of the
Right,
session,
right.
then this session, if it ends, say around the same time, and they're not able to pass this for whatever reason, then we have to wait till the next session. But I assume
I think they
it's
can
not
extend it
extended.
also. They can extend it.
Extended.
Okay.
So assume, for example, in this session we are able to have Rajya Sabha pass it and Lok Sabha pass it. There's also an importance to why Rajya Sabha needs to pass this quickly, because once this is done, they need 50% of the states to ratify this amendment. There are 29 states today. There are 31 if you include Delhi as also Pondicherry. But Delhi and Pondicherry are not considered to be states as per the constitution. They're still union territories with legislation.
Right.
So you have 29 states. We don't expect any problem with respect to these 29 states, but they still need to have 50%, about 15 states, pass the laws on this.
This would have to be in their individual
In
sessions.
their individual sessions.
Okay.
Okay. So right now all the monsoon sessions for all of these states are also happening. Okay. So assume, for example, I think BJP is in about 13 states in power. And then of course you have Bihar and others which will obviously go with it. So you probably will have this. But the only thing is, if you miss the monsoon session, then these legislatures will really convene in winter.
Can they not call a special session
They
for
can
this?
call a special session. So they can call a special session, but you're still looking at somewhere between August and December for all of that to get wrapped up.
Okay.
So the outer limit is December for all these states to convene
Okay.
and then to be able to pass. Of course, if they are able to pass it in the first week of August, then you obviously can have some of the states also take this issue up and be able to pass it in this session, which makes the whole session
So if the
faster.
Rajya Sabha passes it in the first week of August, you're saying there is still a slim chance that some of the states might be able to push it through in this monsoon
Yes.
session or their individual monsoon sessions.
Yes.
If not, then either they call special sessions or it gets moved to the winter session.
Winter session.
Difficult to predict.
Difficult
but
to
that
predict.
might take up to December
Yes.
for state approval to come in.
So state approval to come in, that's very important, because only once if you go to the next slide, only once you have the states, 50% of states ratify, then only the GST Council can be created to be done within 60 days for them to make recommendations relating to model laws.
Okay. So this is critical, because not only do you want the constitutional amendment bill passed, but the GST Council depends on the formation or the approval by states.
By the states.
Okay.
So
Why is it so important to have the GST Council formed quickly?
the GST Council is most important. Like I said, GST Council has got the decision to make with respect to what goods are going to be in GST, what exemption they are going to have, the threshold that they are going to apply, what is going to be kept in the form of place of supply rules, and the floor rates for the different commodities. So they actually are the most critical piece in the entire jigsaw puzzle, because based on these recommendations, the model GST laws are all going to be prepared, and then the model GST laws will all have to be put forward by the individual states in their houses for the purpose of being able to synchronize all the GST laws. So GST Council will come in, they will put in the various things that they are supposed to do.
They
All
will
that
also
needs to get
issue rules.
incorporated.
Their rules will be separate from what the GST law is and
So
the state GST
no,
laws are.
They are basically going to be a council. It will be like a commission report. They will say this is the report that is there. Those reports will have to be taken by the law commission or the law ministry along with the finance ministries of the different states, create the laws, amend the laws to bring it in line,
Okay.
and then for the GST laws then to be put forward.
So that's where I wanted the
forward.
explanation. There is a model GST law that the centre put out, I think, about
Yes,
a month ago, right? Now that law was designed in consensus with the states.
Yes.
Because that was done by the Empowered Council of Finance Ministers, correctly?
There was approved by the Empowered Committee of Finance Ministers for discussion.
Ha.
So it's certainly not the final law on this. As you know, for example, ADMK was not fully in agreement
Okay.
with the law.
So we have a model law there.
We have a model law, but that really is from a center and IGST perspective.
Okay.
We still don't have the individual model laws.
So the
which are
centre
there
put
for
that
the
model
different-
law out for consultation, right?
Yes.
They said, please, dear public, feedback on this
Feedback.
law so we understand whether you like it, don't like it, and what aspects you like
Correct.
or don't like.
I would say it's only a skeleton right now. It's not even law. It's a basically skeleton, very rough draft.
It's only a...
It's a rough skeleton. Yeah,
Sketch.
it's not more than
Skeleton.
that.
Okay, fine. So you're saying it still lacks a lot of detail.
Lot of things are to
Okay, so now that GST law is actually the critical law. So
Yes.
just to make it clear to everybody, the Constitutional Amendment Bill allows for India to implement GST, but the actual implementation of GST, the mechanics of that will all be determined by the GST law.
Yes.
That GST law, that model GST
model-
law will have to incorporate in whatever
The
recommendations
recommendations of the
made by
GST
the
Council.
GST Council.
Perfect.
Okay, and once it does that, the model GST law then has to be legislated by
Yes,
the centre
by the center
and states.
and all the states.
So explain that to us,
So
right?
once, for example, the model law is merely a framework in
Correct.
which you want to have. There are certain tweaks that you can do individually for each of the states, and then just like any law gets passed, it needs to be tabled and it needs to be passed by the House. The good thing is, GST law being a money bill does not need to wait for the Rajya Sabha. You can put it in the Lok Sabha and then be able to pass it.
Okay. So the thing is, let's assume for a moment, you said it might take up to
December
for all the state approvals to come in for the constitutional amendment bill. Let's assume at the same time, Badri, there is conversation going on the model GST law. Feedback is collected.
They draft it, they amend it.
Now the only hitch there is that till the states don't approve this, the constitutional amendment bill, the GST council cannot be formed.
Yes.
And if the council is not formed, the council's views are not clear. And if the council's views are not clear, those views cannot be incorporated into the
Yes.
model GST law. And if that can't be done, then the model GST law cannot be legislated by the centre or by the state.
states.
So okay, so we have to wait till the state approval comes in
Yes,
for the constitutional
yes,
amendment
yes,
bill.
yes,
And
yes.
only thereafter can the GST law be passed by the centre and by the state.
You are spot on.
Okay.
That's exactly how
So
it
it's
is.
only enabling clause. It's only a stepping stone. That the constitutional amendment is only an enabling clause. The laws have to come.
Yeah.
So
And those laws, you're saying, what is the timeline you expect those laws will come in? When will they get legislated given this,
So if you take
this
December
issue?
is when the ratification happens, and let's say they take about a month, or they may not take 2 months for the GST Council to form, they can form in a few days. But still, there needs to be machinery that needs to be put in place for all the recommendations to come. There will still be further negotiations on the actual law between the states when they are going to be part of the GST Council. Realistically, if you say December is the time when they ratify, then you're looking at somewhere like the budget session for the laws to be introduced in the individual houses of all the states and this thing. So you're really looking at this suggestion, then the center and the state to be implementing this, which goes to almost February, March.
Okay.
Because the budget session, as you know, is from February to May. That's the session when it happens.
But
so you're probably going to have this introduced in Feb if they only meet the December timeline for the ratification.
Okay. So 2 questions there. Can a special session not be called for states to pass and the center to pass the model GST law? That's one. And even if it's only the budget session, can they still say that the implementation date should be April 1st, 2016? Or is it now fairly clear, given this timeline, that April 1st is just totally unrealistic? It's never going to be the case.
According to me, God bless Vineet and God bless India Incorporated if they are going to implement this in December and still have 1st April as the date for implementation. I don't think anybody will be able to manage it. According to me, the realistic thing to say is that April 2017 is ruled out for all practical purposes.
Can I put 2 bits of wisdom?
Yes,
Yes.
please.
You have UP elections and Punjab elections next year.
Right.
Do you expect those legislatures to pass these bills?
Don't ask me questions.
but,
It's not possible. I don't think.
So
but
you're saying
Implementation 1/4/2017. Politically, these 2 states will not be ready.
So if
It
it's
is my
not
opinion.
in April, when is it next then? What is the date we should be talking about?
I think we have to talk in the next, after some time. No?
Not now.
Oh,
is
not
it?
now. Not right
Okay,
now.
Not right now. Okay, fine. We'll wait
But,
till then.
So I'm just talking about the timeline of
Okay,
passing the bills,
okay.
because few states will intentionally delay it. It's my hunch that, of course, what we are talking is like all states are working together. We are talking about 36. I mean, like 29 states,
29 states.
7 union territories. Of course, they work under
Union territories is under
the center, but of course, they have their own limitations and processes, and central government. So they have 37 administrations, 37 legislatures, which we are talking about. Do you think they work in tandem? No, I don't think so. So they will
you're
have some
saying
time.
Budget session is also a
Budget
long
session
stretch.
laws, these
नहीं होने वाला है.
laws can be passed. Means some of the state like center can pass.
नहीं, but
Yeah,
everybody
implementation.
has to pass.
Implementation.
Implementation.
Implementation के लिए
No,
तो
I don't
everybody
think-
has to
I
pass
don't
it,
think
right?
so. I
You're
don't think
saying that we will not have full passage of all GST laws by budget session
No,
next year.
it's not. And if they do half baked with some of the states and implement it, it's he rightly said, God save me.
God save you. Interestingly, there's one clause, if you read the Constitution Amendment Bill, which says that if the Constitution Amendment goes through and if the individual states do not expire or repeal the individual state legislations, then the validity of these laws which are not in line with GST is only 1 year.
Okay.
So once the GST Amendment Bill goes through and there's a ratification by 50% of the states,
Yeah.
there is a clause which says that the individual laws which are not in line, or those parts of the laws of the state legislature as also the center, which is not in line with GST and its GST framework, will all expire automatically within a period of 1 year or the day they repeal these laws, whichever is earlier. So you really have a 1 year period after the amendment comes through for all these laws to be changed and then redone, unless of course that there is some compromise over the next few days with respect to extending the timeline, or there are challenges to say that this is not totally against GST. There are other conversations that can happen, but effectively speaking, once the ratification of the states happen,
Right.
then the clock starts ticking for a lot of the people.
So the clock starts ticking, as in it's counting down 365 days.
Yes.
Right?
Yeah.
And within 365 days, the center and the state have to pass the various GST laws.
Or they'll not, yeah, you're right.
I mean, if a particular state does not pass a law, its existing law will get replaced by the model GST
No,
law.
it will not
How
be
will it work?
replaced. It'll expire.
But then what will be the taxing legislation in place at that
So
point in time?
belief is that the states by then will put in place something which is akin to provisions which are in line with GST.
Huh.
But the problem for them is they will all synchronize together for you to be able to have GST implemented as a unified market? I'm not clear about that.
Okay, fine.
What I'm saying is still you have a 1 year gap from the time they ratify to get your act in place.
Okay, so we'll just at this point in time do a quick summary of what we've discussed so far. If you've just tuned in, this is BloombergQuint. We're discussing the GST timeline, and essentially what we're trying to determine is how long it will take for the constitutional amendment bill to pass. Concurrently, the work that needs to go on the GST law, or the model law that will actually determine the implementation of GST and all its mechanics, and how states will have to align their tax laws to that model GST law, how long that process will take, and therefore what really will be the realistic target date for the implementation of GST. And I think from what Badri has told us and what Vineet agrees to as well, April 1st, 2017 cannot be the realistic target for anybody. Whether it's a political party or for business, because the actual, and correct me here again, as I go through this summary, Badri and Vineet, the constitutional amendment bill in itself might get full approval from the states that it requires, the 2/3 state approval that it requires, only by this winter.
Yes.
Right? That's a realistic time frame. Only by this winter. And it's only after states approve the constitutional amendment bill can the GST Council be formed. And the GST Council's formation is critical to the model GST law, because the model GST law will have to incorporate in the GST Council's recommendations.
That's correct.
So till the council is not formed, the model GST law cannot be finalized. And if that's not finalized, then the legislative changes that are required both at the central level as well as the state level with the respect to that GST law cannot take place till that council is not done. So assuming that in winter we have the state approval,
50%
right?
states.
And then we have the GST Council formed,
Yes.
and then the council puts in its recommendations,
Yes.
which will at least take, however smart and quick the council is, at least a few weeks, if not a few months. And then the model GST law will get framed, and then it will sort of have to be legislated on at the center and the state, which is possibly somewhere around the budget session. Somewhere around the budget sessions of 2017.
So effectively they will probably be able to really bring everything in place by somewhere around October 2017. That's probably a more realistic
That's
target.
only from the legislative point of view, you're saying?
Legislative, and probably the implementation also. I think by October 2017.
So now there's one more aspect for the implementation, and that's the infrastructure. Just as critical as the legislation is the information technology network, the GSTN.
Yes.
You guys have been working very, very closely with it. So please tell me, are we ready, anywhere close to ready with the GSTN or not?
I think the one good thing was that GSTN kept working even when there was a lot of turmoil, confusion, uncertainty relating to GST.
You want to quickly explain the GST, Badri?
So I'll explain what is GSTN.
GSTN was set up in 2013, right?
Yes, GSTN is a very interesting concept. It's a private-public partnership almost, where, for example, the big banks, ICICI Bank, Axis Bank, and so on and so forth, and also the governments have come together to form a company called GSTN as a private company, which is to administer the entire IT backbone of this GST network. What they do basically is they're going to allow people to be able to upload returns, people to be able to apply for registration, people to be able to apply for refunds, and so on and so forth. And they basically will say, based on how you upload the data and information, which money has to move from which state to another state. As you know, payments will all happen in the state where you are registered, which will be the home state for you. But the goods and the services may be in a different state, which may be the destination state. And therefore the GSTN basically allows you to pay money in your home state, and they on the back end will be able to take this money and put it into the destination state. So that's something which is between the states as to how they're going to be able to administer this. So that's a very, very critical piece of the infrastructure, because apart from just going digital, going GST, we are also going digital, in that we are going to implement the entire GST digitally, which is going to have an impact on the efficiency of collection, and therefore it is going to increase compliance, make it more efficient, which is also critical for you to be able to hold inflation down and keep the rates down. So it's very, very critical.
Absolutely.
GST had been working on this for some time, and they basically had last year a proposal and tender which came out for companies to be able to come and actually build the infrastructure. And Infosys basically won the tender. And they appointed us as one of the consultants to help Infosys build this GST network, and we've been working with them for the last 6 to 8 months.
Are we ready?
according to me, we are in very good shape.
No, what does very good shape mean?
Very good shape means still, because see, there are limitations, because still today we have a broad outline of what registration is, which is ready. We have a broad outline of what refunds are, but there is still a lot of recommendations on threshold which GST Council has to do. There are going to be recommendations with respect to floor rates. There are going to be recommendations with respect to place supply. These are all, we are all working on fairly flux-oriented, ever-changing kind of landscape of GST with respect to the laws, because there is a lot of feedback going back and forth. So the overall framework to be able to implement it is ready, but the details still needs to be crystallized.
How many taxpayers will come on to this GSTN network? Some 6 trillion or something like that, some totally crazy number, right?
I think about 65 lakh is what they were saying, or just 1 second. Ashish, 65 lakhs, 65 lakh, that is 6.5 million taxpayers will be on the GSTN once it is implemented
And many
in India.
of these are taxpayers that have actually never interfaced with a tax system before, right? Is that fair to say?
According to me, that's a very
Small
fair.
businesses, small and medium-sized industries. Well, let me put it, small and medium-sized industries would have had at least a sales tax registration or something like that. But a lot of the small businesses might have actually never had to interface with a tax system of this nature.
You're absolutely right. We're probably going to have about 15 to 20 lakh new people come into the system because of GST.
Ah.
15 to 20 lakh.
Okay. What are your concerns about the readiness of the GSTN or the GST infrastructure? And I don't mean this badly. We're not saying, oh my gosh, we're not ready. Oh, how will this happen? I mean, what ought to be in place?
See, the work was going on, and I think I remember way back 2013 or 2012, it was announced that we are ready with the GSTN framework. So, but for GSTN, I see not only infrastructure, IT infrastructure, there are 3 or 4 stakeholders in GSTN. One is, of course, software part, hardware part. Third one is human resource. That's the backbone basically. And fourth is the user, end user, like the taxpayer. So, as he rightly said, 15 to 20 lakh new taxpayers are being added because of this low threshold of 10 lakh. I hope it increases to 25 lakh. But if it is only 10 lakh, every small panwala or maybe small parchunwala will be in that GSTN net. How computer savvy they are. Are we?
Just explain the threshold, right? When you say 10 lakhs, you mean
10 lakh turnover.
Currently, if your annual turnover is 10 lakhs or more,
Exactly.
you will have to be part
You have to be part of the GST. In fact, you have to be. If your turnover is 9 lakh, you have to register for GST, and if you are above 10 lakh, you have to charge. You are not exempted as of the current draft law.
Correct.
And for Northeast, it is 4 lakh and 5 lakh. So if your turnover in Northeastern state is 5 lakh, you are part of the GST. You have to charge. Earlier, I think that various states have various exemptions, and for excise, it was like 1 crore,
Yeah.
1 crore plus.
Right.
So every small shopkeeper has to come into GST network, and how ready they are. I mean, we are talking about big businesses. I mean, we say that are your SAP systems are in compliance, or your other, whatever systems they are using, Oracle or everything. People are trying, but as things are in flux, we are also not we don't know what exactly is going to come, because network says what exactly you want. We don't know. We are in always, as of now, it is in concept paper. Okay. So big businesses or small, nobody knows what's going to final come. So until unless the law is ready, we know what is going to be the place of business, what is going to be the rate, how the credit mechanism will work, how many states we have to go, how we have to go get registered, whether 2 separate registrations will be treated as 2 taxable person or 1. There is a big confusion on that also right now.
Okay.
Other day I was in a conference, and there was a confusion among the experts themselves whether the branch transfer will be exempt or not. So that's where we are right now.
Okay.
So because there's a definition of person, there is a definition of taxable person. Now taxable person has been defined, that person who is required to be registered. So if I am a person as individual, Vineet Agarwal is required to be registered, and Vineet Agarwal has 2 branches, both branches are going to be 2 separate taxable person or 1. Because that makes a lot of business decisions also. Because am I required to maintain various yards, various godowns, various shopping outlets, or I need a central? It depends. Depends how what works. Yeah.
Set us off onto the last but most important part of our conversation, which is that we've determined that it could take up to budget next year and maybe even longer for all the legislative pieces to fall into place, right?
Yes.
The GSTN network is in the state of preparedness, but that too needs all the details from the law end to be fully prepared. So they may possibly have time till March next year. There's progress being made on that front.
Yeah, we believe that by April next year, if it is to be rolled out, GST will be ready.
Okay, fine.
So
that leaves us now with whether businesses are ready or not. That's the most important question, right?
Correct.
And there's two parts to that question. If one is whether large businesses have started preparing, and the other is what will the fate of small businesses be? Because really for them, this is going to be the toughest transition, right? First on large businesses, are you seeing most large businesses, start work towards GST, and what is it that they will have to do to be ready for all these changes?
So if you take, for example, the large businesses, there are again two categories of businesses. Businesses which have been very proactive because they believe in GST and they believe in being ready from the very beginning. And there have been businesses, again fairly large businesses, which because of this uncertainty and having to start and stop these GST initiatives in the past, have basically taken a view that we'll just wait and see whether GST will really get implemented and then take, because there are significant resources which need to be invested in order to be able to be ready GST wise. So I would believe that large businesses to some extent are ready, but I do believe there are significant numbers of large businesses which will be taken by surprise if GST were to be implemented overnight. That's really what I feel in the state we are in at this point of time.
Okay, Vineet, let me sort of ask the same question to you. You're a large business. What are the steps you have taken to start preparing for GST? Talk us through that, because many of those from within business who are watching this broadcast will either want to share their experiences or will want to learn from what large business is doing.
Well, it's an up-down story so far. I mean, we initially started working on the concept paper, multi-state working. Okay, so we started what kind of impact it can have on our business if we continue with our existing setup. Now, once again, then you have to wait and watch, because there were a lot of opposition that to 1%, but the major states which we are working with, that those were favoring this, because of course, this state enhances the state revenue. Now, once the clarity comes, again we have to go to the drawing board.
Yes.
Okay. Then we have large businesses. Again, we have to consolidate our operations. We have to see how it works, and then there is a lot of change in our IT system. Second part is, this is towards the business. Second part is towards the implementers. Again, this is my favorite topic. You are looking at 36 administrations. They have to gel with each other. Their mindset, their working style has to gel with each other. As of now, you have a central excise and service tax department. Both, even excise and service tax department don't go with each other. Being the same department, they're two wings. They don't go with each other. Different states function in different manner. All of them have to come in the same manner. There are confusions which I'm looking at right now is place, let's say place of sale or place of supply and the valuation. Now we have two administrators. Now, somebody asked the dual GST system, that there will be two administrators who will decide what is the value.
Yeah. So just to kind of
you've posed technical questions. First, simplify this for me.
That's what I'm saying.
What are the 5 steps that you are undertaking
exactly.
to prepare for GST?
5 steps.
Or 3 steps or 7
We have,
steps?
we have done impact study on our businesses. We have done on the basis of concept paper. But then this 1% has changed the entire
But this 1%
working.
assume now it's gone.
It's gone. So once again we have to start with this now. See, we have to see ultimately GST is another tax.
No, so what all will you have to change in your company or
Yeah.
in a large company like
Of course,
yours,
of course.
To be prepared for GST? Let's assume that
I'll tell you.
If
I'll
tomorrow
tell
you
you.
found out from the politicians
Yeah.
that
It's
GST
coming.
will get implemented October 1st.
Oh.
Now that sounds like a realistic time frame. What are the 5 things?
I'll say you have to work two-pronged. One is to change the mindset, because as of now still we are talking about the excise and service sales tax
So
terminology.
that's from the-
No mindset from administration. No, into the companies also, because other day I was in one of the, I keep on attending a lot of conferences on this, and I find people are still talking the same terminology, and they are still not out of that concept of place, whether sales, what is the sales point, or whether it's a place of removal, place of clearance. So all those things, that mindset has to change, because ultimately those are the people
From within
on the
the
ground who
within
have to
a
function.
company.
Yes,
Okay.
exactly. So you require them to be trained. They to be trained as per this new law, its processes, its laws. That's one thing.
Right.
Second thing, your IT system, of course, for large businesses, I don't see any problem in that, because the systems can be moduled accordingly.
Right.
The problem will come with MSMEs and the small businesses who have to become computer savvy. Are we reaching the last mile point in the small villages?
Right.
Where there's no power. And as of now, it's all, everything is, I understand, online. Its credit has to be seamless credit. It's not like the credit on basis of timeline. There has to be seamless credit, and the movements are happening. Like I'll give a small example. I come from a small place in Rajasthan, a town called Bayana, which is a big mandi of sarson, mustard. Okay, and mustard is exported to Bengal and Kerala and other states. So now these are small businesses. I mean, 8 hours, 9 hours, you don't have power in that town. Okay, now that credit, the invoice is to be raised there, and the truck has to move from Rajasthan to UP to Bihar to Bengal.
Correct.
Okay, and these 4 borders have to be crossed. That invoice has to be available online for that credit. Otherwise, the check post business has to continue then.
Correct.
So we are not talking about a JSW Steel headquartered in Mumbai. We are talking about a small broker sitting in a Anaj Mandi of Bayana.
Okay.
So-
how are we going to resolve?
So that-
how are we
yeah.
going to resolve some of these things?
So
Badri?
I think we just kind of finished what
it's okay.
Vinny said
Keep going.
was because I think the problems that the large businesses face and the small businesses face are totally different. So for the large business, the way I see it is they have resources, they have the people, but the problem for them is the speed with which they can change. Okay, for them the real question is if the GST law comes very quickly, will they be able to train their internal resources and be able to modify and check. See, the key thing in all of these is not so much the implementation, but the results of the implementation. So you need to check, you need to see what the data is for a month, verify, and then be able to see whether you're good. So a lot of this, if you start doing parallelly, because you don't have you have a very short timeline, then the chances of making mistakes
Do
are
you
high.
have enough information right now for at least large businesses to start doing this
So
parallelly?
I think there is enough information right now for the
Okay.
large businesses to do, and I recommend the large business should at least start the impact study and then be able to start doing the analysis of what their supply chain is going to look like, because this is going to be a revolution not just in tax laws, it's going to be a revolution in IT because you'll have to change, and also a revolution in supply chain. The longer your supply chain is, the more validation you have in supply chain, the more expensive your goods are going to be, because you're going to have a higher rate of tax, like I explained last week, higher rate of tax on the supply chain. So you need to have a situation where also there is no requirement for you to have a warehouse in every state. So there is going to be a lot of business decision which the business will have to take to ensure that the prices are not kept at the same level or higher level than what it is.
Got it.
So you have to be able to reduce your prices, make it more efficient, implement the IT, train your people, and get it right. That's the real challenge for the big businesses. Okay, small business totally different. It's an opposite challenge. For them to be able to move into a GST regime is very easy because there's only so much that they need to change. The way they need to understand what is their working capital. They need to have an idea of whether they have IT capabilities. Like we said, we'll come back to that in a minute. So they need to have an idea who are their top customers, how much time they take for the top customers to pay them, so that they have an idea of how much of the working capital that each of them require. They need to have an idea of whether, for example, the credit period that they're extending to their customers, whether it needs to be shortened or increased.
Now,
Because
can you explain why they need to have?
I'll tell
why
you
they
that.
need to rethink working capital? Or
I'll tell you. It's a very important thing and very good question.
And
I should
maybe if you
explain
want
that.
to use an illustration, that might be fine as well.
Sure, I probably will do that. So what I'm going to first is explain, and then I'll come to the illustration,
Yeah,
so that we
fine.
have an idea of what it is. See, Vineet basically made a very good point of the stock transfer. Okay, what he basically said was, you don't have an idea whether there needs to be a tax on the stock transfer when I make a sale from one state to another state. Okay, within the state, if it's the same registration, there's no problem.
My office in
I'm
one
telling
state-
you,
Yeah.
there is a confusion on that also.
Anyway, let's not
Within the state
confuse
also,
further.
people
My
are
office
creating
in
it.
one state,
Let's take that.
My office in another
Other
state.
Yes,
That's what
let's
you mean,
take
right?
for example.
Yeah.
Okay.
Let's take an illustration, very
Okay.
simple
Is
illustration.
This a big business illustration?
Small business. I think big businesses like Vineet, they'll manage. They'll figure out. I am more concerned
No,
about
it's going to be
the.
a big issue for us also.
Yeah.
18 blockage of 18 to 20% of capital is a big issue.
Okay, fine. Okay, let's try and understand.
Let's
what-
try and do this, for example, from a small business point of view. Okay, take for example a small business. I'm going to take for example a trading business. It's
Okay.
an easier
Yeah,
thing
that's
to
it, yeah.
have in here. So you have my favorite manufacturer
Ah,
who sells to a small trader,
correct.
who in turn sells to a consumer.
Right.
Very easy, easy example. I always say the manufacturer will charge 100 rupees to him. There's going to be an excise duty of 12.5 on him, and there is a 14% charge on this. No problem. So effectively, for example, the cost to this trader comes to about 126.5.
Yeah.
Okay. He in turn will not be able to take credit of this, so he'll have to put VAT on whatever is there at this point of time. So his rate, so for example, if it is 126.5 plus, take for example, he puts a tax of about 20. So effective rate for him is 146.5. But the key thing is, see this, effectively for him this is no longer a credit, so which is there, and he ends up paying all of this tax only when he makes a resale.
Right.
Okay. And today, if he's an excise person or a VAT person, if manufacturers paid this tax, he'll be able to take credit. So this 12.5, once he refunds to manufacturer, he can take credit of it. He can utilize it. Problem for him is tomorrow the number becomes say 20%. Okay. So you have 100 plus 20. Okay, which looks very nice for the manufacturer, so it becomes 120. But you see, when he has to pay the taxes further on the consumer sale, he is going to have to pay 20% on 120. Okay, which almost makes it 24, which means he will need a higher working capital because he will have to pay this 24 upfront to the government, though the consumer may not be paying him that money immediately. Okay, so the consumer is going to take his time to be able to make the payment.
Why? On sale, the consumer will pay him, right?
So, for example, there's a credit period, 90-day credit period, 120-day credit. So, if your consumer is somebody who, in India especially, you have consumers who default on credit period multiple times. And with our court system, which is slow and not ready to implement this. So, if a consumer delays making a payment to a trader of this 24 rupees, that person is in trouble. Okay. So, therefore, there will be a higher working capital requirement for him. Similarly, for him, if you take for example the manufacturer, for him also whatever are going to be his inputs, unless the vendor is going to make the payment of taxes, he is also not going to be able to take credit. So, this 12.5, this 20 which he is going to have to pay will be paid through something called a cash and something called credit. Now, this if it is dependent on what the person supplying to him is doing in his system, there's always going to be an uncertainty, which means there's going to be a pressure on cash. Minute you have pressure on cash, you have a higher working capital requirement, and so that becomes very, very distinct.
How do small businesses overcome this?
So this has to be financial prudence. So to a large extent, be able to weed out. So today, for example, the small businesses, according to me, the first thing they should do is do an 80-20 rule. Figure out who are the main customers that they provide services to and receive services from or goods from. Map out what is the credit period that each of these people are taking for the purpose of making the payment, and have some idea of your working capital. So that is one. Second is, according to me, from now till the time GST is implemented, they'll have to be financially prudent. Don't excessively spend things on things that you don't require. Keep your investments in check. Make sure you have enough buffer. Because you'll also have to have somebody from IT. You may have to invest in IT infrastructure, which is something new to you. Okay,
right. So
expenses are going to go up because IT will have to be there. You need to have a consultant who's going to be able to do this. So according to me, financial prudence over the next 6 months is extremely important. Cutting back on credit period is going to be very, very important. Making sure your customers are paying on time. Making sure that you have you select your customers properly. You select your vendors properly, and ensure that you are able to have a more stable and robust credit mechanism. That's the immediate minimum thing that they need to be able to do. There's not much they can do because they will not have access to top brains. So for them to be able to implement is much easier, but what to implement is a challenge for them. For the big business, what to implement is not a challenge, but how to implement it and how quickly to implement is a challenge.
In that scale is the challenge.
It's a very, very big challenge for them.
Okay.
So that's really where, according to me, is there. Working capital will be a big problem for everybody. Not being able to upload your returns on time is going to be a problem for you, because then the minute you're not able to upload the return and the person in front or the person in the back has uploaded the return, you're going to get an inquiry from the department as to why you're not paid the taxes. So there are going to be issues with that.
So what can you do to resolve the issue of uploading returns?
That is totally dependent on two things. One is going to be what you can do in terms of being IT ready. Okay, or for example, collectively, for example, their association comes up, and probably these are things that an association, the community has to come together, have an investment in a IT internet portal or some sort of a community or an association based thing. Maybe for every, if there is a business enclave or a business place where in every state or every village or every this thing, have people come together,
so
invest.
Let's use the
and then
example of Vineet's,
Yes.
in Bayana in Rajasthan, the mustard traders.
Yeah.
What
So-
should they do? Should they come together, create some combined common infrastructure in that region so that they can actually be able to upload their returns. They can, get their invoices to show up online as their goods pass through 4 states or 6 states or 8 states. What is it, the 3 or 4 key basic steps that they should
So
consider?
according to me, one of the few basics, and of course Vineet can add to this, is according to me, for example, take a situation, I'm a trader in Bhayana in mustard, okay, and I basically now have to have goods move from say Rajasthan to say Bihar, where there's a consumption of net consuming state, for example. Unless I raise an invoice and I upload the return on time, the fellow, when the truck moves, if the invoice is not with it, he's going to be stopped, harassed, and all of these things are going to happen. So the key thing is going to be able to, whatever happens, he has to digitally be connected with the rest of India. Problem for him is power, so he does not have. It is not possible for every trader to be able to invest in power and have a generator and then be able to do that. But again, for the generation of invoice and for the uploading of returns, it may not have to be done on a daily basis, for example.
Okay.
So as an association of say 10 traders, you can come together and maybe in one person's house or in one person's businesses, invest in having power backup, have a chartered accountant or a consultant or a local consultant who can come in say 4 hours in a day before, say all dispatches happen early in the morning, especially of sarson and everything. Have somebody who's able to come in the morning before he goes to work or something, or one of them comes in and raises invoices for all of the traders, uploads that information, and on say on a fortnightly basis comes, checks what returns need to be uploaded, and then using your power backup, be actually able to do that. You cannot give a excuse, I don't have power, therefore I will not move. Okay. So
But
India
I have
is
a
being
tricky
very
question.
yeah.
Even today, when you go to a bank branch, even a city like Mumbai, sometimes they say our systems are down, we can't give you this cash, or we can't make this payment, or we can't give you this slip, or whatever it is that you're seeking, right? Now, if this movement of mustard from Bayana and Rajasthan has to get to, let's say, some part of Bihar, okay?
Yes.
And at 4 different checkpoints that invoice will be asked for. Those checkpoints also need power.
No, so
How will it work? What if at those points the system is down, which is so frequently the refrain, right, in India?
So-
How will it work? How critical will that be?
So two things. One, Menaka, we are talking about having a small business being able to comply, okay, in a particular place. Once he has dispatched the invoices, things are out of his control, because today also check posts a big problem. Today also check posts, there are trucks which stand for hours and hours and hours together.
Yeah.
That's not his problem. It's a problem for him from a working capital payment and all of that. But from a system point of view, it is not his problem. And there's little that he can do except for praying.
So that won't change.
So that won't
might
change.
that might still be the
So
issue.
the number of check posts may reduce.
Okay.
Because the government feels that once entry taxes are not there and there is no requirement for you to collect sales tax
Correct.
at each place, because sales tax will automatically come to the destination state. There's no requirement for you to have check post or to have that kind of scrutiny in the check post.
Okay.
Once you are able to show that I have a valid invoice, check post need not check and then be able to allow this thing. Maybe they'll have RFIDs, or maybe the check post will get connected through system. The problem with banks are that the systems are so complicated that it becomes difficult for them to operate at times.
Okay.
But for a small business, the system need not be difficult. And then again, the thing is going to be how easy and how welcoming is the GST going to be.
Yeah.
If the IT network is easy, it's vernacular, it's easy to upload, you can do it offline. When the power comes back, you'll be able to upload it. Then systems become much
And
easier.
is it being designed that way?
I think that's
It
being
is.
designed that way. The good thing is the government is investing in making it as simple as possible for people to be able to implement it. There will be certain constraint because system is robust. If you want to make it robust, certain amount of data needs to be provided.
Correct.
But to that extent, according to me, GSTN is still trying very hard to make it as easy and accessible to people. And over a period of time, they're also going to have Suvidha providers and systems in remote locations so that you'll be able to take your pen drive, be able to stick it into that system in a common area,
Okay.
and then be able to upload it. But of course, that's going to take time. In the meantime, I think associations have to come together, communities have to come together to comply.
Okay, fine. So, Vineet, I think very nicely the illustration of the mustard business in Rajasthan and how it can get geared up for GST. Any thoughts you want to add to that? Because I know some of our viewers will be from within small business and they will want to know what they should be doing between now and, let's say, budget sessions next year.
I think small businesses need to change their, in fact, first of all, they have to make their mind. Now there's no escape from compliance basically. Now because it's like there's a tax is utilized in the destination state but is collected at the source. So like earlier what used to happen that you can just hoodwink, and you can sell your product and just vanish. Product can vanish, like as I say that your consignment starts from Rajasthan and it is destined to be Bengal and somewhere it is vanished in UP. That won't be possible because then credit will not be passed on. It will be ultimately inflationary. The end user will not be able to get credit. So we have to change the mindset because ultimately it's for simplification. GST is a good thing. Only thing it's implemented well-trained people, and businesses are given proper time to implement it.
Okay, fine. So that brings us to the very last question as we conclude this, which is that we are not talking about April 1st.
No.
That seems to be we should not be talking about. Let's put it that way. We should not be talking about April 1st at all. If anything, we should be talking about October 1st.
October 1st.
Does that seem more realistic, Vineet? October 1st, or would you prefer that it's actually aligned with the financial year?
I would prefer 1st April 2018.
1st April 2018. Yes. Okay, fine. That will give all businesses, big and small, all legislatures, central and state, and all infrastructure providers enough time to be ready for GST.
Just to give a final twist to this.
Final last
twist.
word, yes.
Australia took 2 years to implement GST.
Australia.
Yeah, so they gave a transition period of 2 years for businesses to be brought in, and they spent time to ensure that when the GST was implemented, no businesses got a windfall and no business suffered. Okay, so they ensured that really truly your business is taken care of when you moved from the old regime of excise regime into this. Malaysia gave 1.5 years and they were not happy.
Okay.
If you are talking about giving 6 months or 8 months in a country like India of this complexity, I think that's going to be really challenging.
So you're also voting for 1st April 2018 at least.
Also, at least I'm talking, it will need time because Malaysia, the kind of havoc was created last year. Remember, I mean, it was implemented on 1st of April, and by May, I think people were on road.
Yeah. Okay.
So we have to see that also.
Yeah.
Okay. We have a couple of questions that have come in. So, for instance, we have Joshua Ibizner who's written to us saying whether this implementation delay that we've been discussing is in fact a benefit and blessing for the trade to get themselves well prepared. And I think the obvious answer to that, based on everything we've discussed, is yes, yes, and more yes, Joshua. So, if you are from a small business, then you should count this as a blessing and start getting prepared, as both our experts have already told you. Somebody else has put in a question on 2 parts. If the panel could brief the process of transition to GST by various dealers. This has come in from SR Charan. I'm not sure how many different dealer types we can talk about, but is there any other illustration that any of you can provide that gives dealers an idea? For instance, let's say a telecom dealer, an idea of what the GST impact will be in brief.
I think it will require, in fact, a special session for specific businesses. But dealers, yes, of course, as Badri rightly said, the credit period has to be more important. How many warehouses you want to keep, that will be things to see. And just wait, the clarity on the branch transfers, interstate transfers, just wait for it, don't decide as of now.
Okay, fine. And one final question we have time to take comes in from Value Investor. Can someone explain the exact math on how GST will increase GDP growth by 1 or 2 percentage points? We've been through this last weekend. Badri, I'll toss it back to you on this one. Can you do the exact math for us?
So exact math is, again, like I said last week, is an interesting one. First thing I said was, today, whenever you're manufacturing goods in India, there's an inherent amount of taxes which are there. For example, if I'm a manufacturer of goods and I'm a trader in the goods, I don't get any credit of service tax. Similarly, if I'm a services business, say Infosys, I buy laptops, I don't get any credit of the sales tax paid on that or VAT paid on that. Which means that all goods, whether imported or exported in India, have got an inherent amount of tax involved in it itself. The minute you have a system by which you're able to eliminate all inherent taxes because you get full credit, whether it is services business or goods business, you're going to be able to do that. Overall, the cost of your goods comes down without having to do anything else. No technological changes, no changes in your supply chain. Just by being able to come into a stable GST regime where everybody removes the taxes from your goods, your prices of goods drop. The minute the price of goods drops by any basis point, you're going to be cheaper export-wise, and therefore your exports immediately get an incentive. The minute you have an higher export, especially of IT companies, they're able to make more money by being able to reduce their cost. You're going to have a fill up to the economy. Coupled with the fact that we have these nuisance taxes, like these entry taxes, your octroi and so on and so forth also go. The need for check post comes down. which if it comes down and if it really implemented properly, you're going to have much faster movement of goods and services. Today, for example, logistics cost in a company is about 14% of the cost, when in developing nations it should be about 8 to 9%. So if you're able to bring these two together, the World Bank also says that if you have these two combination, then immediately it reduces the cost overall,
of doing business,
makes it efficient. So it's all a question of being able to sell more, right, at the same cost.
Yeah, let me add one more thing.
Yeah.
GST will cast a wider net, hopefully.
Yes.
That means many more people who were not paying taxes earlier will now pay taxes, which means hopefully the center and the state will make a little bit more money,
Yes.
if at all that happens. And if they are able to make more money, they are probably able to invest it in more productive
Yes.
ways. If they're able to invest it in more productive ways, it has a virtuous impact on the economy. And so that also is one contributing factor. Though how people arrive at 1% or 2% or 0.5% or 0.7% is the subject matter of several debates, and we're
Yes.
not going to defend
Get
them
into
right
that.
now.
I was told by an expert it's a back of envelope calculation that actually I'm not buying the theory of that saving on credits, because ultimately all the governments need money. So
Correct.
somehow that revenue neutral rate will come, that money will come.
Okay.
Whether you go give it by credit, seamless credit, the rates will increase accordingly.
wider tax
So it's a wider
net
tax
and
net and
efficiency.
everything. And ultimately what I see is the efficiency, which is important, because like your road movement, now a lot of checkposts you have at municipal level, at your state level, if that goes, and if our highways support that movement, I hope that there is faster movement of goods from one corner to the other corner, and that way consumption will increase, and I see that efficiency to bring in the growth.
All right, gentlemen, we're going to leave it there. Thank you very much if you joined us on this broadcast of the timelines with regards to GST and if India is GST ready. The conclusion to our debate today is that we're not GST ready, whether it's a big business or small business. So you need to start taking steps now, specifically the steps that both our panelists have spoken about earlier in this conversation. Thank you very much for tuning in to BloombergQuint. Thanks very much to both Badri and Vineet for being here, and we'll see you again next weekend.